Okay, I want you to forget everything you think you know about accounting. Forget the dusty ledgers, the boring bookkeeping, all of it. What if I told you that accounting isn't really about crunching numbers? It's about learning the single most important language in the world of business. In this explainer, we're going to decode that language so you can understand the story that every single company is trying to tell. Ready? Let's dive in. Right off the bat, this quote just completely flips the old script, doesn't it? The stereotype of an accountant, quietly logging numbers in some back room, that's long gone. Today, they're right at the heart of the action, turning raw data into these crucial insights that literally guide the entire direction of a company. And believe me, this isn't just a small shift. I mean, look at these roles. You've got forensic accountants acting like financial detectives, solving crimes like computer hacking. E-commerce accountants are basically the architects of our online economy. And environmental accountants, they're figuring out a company's real impact on the planet. This is accounting with some serious real-world power. So let's get right to the core of it. We're going beyond the spreadsheet here to ask, what is accounting really? This right here is the key idea. I want you to think of it just like any other language. It has vocabulary, it has grammar, and it's used to communicate very specific information, in this case, economic information. It's the universal tongue that allows a company in, say, Japan to be completely understood by an investor all the way over in Brazil. So if accounting is a language, then what's its grammar? Well, that would be the accounting process. These are the rules that make sure everyone is speaking and, more importantly, understanding it in the exact same way. And that grammar? It's built on four pretty simple logical steps. First, you identify an event that has a financial impact. Second, you measure that impact in actual dollars and cents. Third, you record it all in a systematic, chronological way. And finally, the most important part, you communicate it to the people who need to know. That's it. That's the entire cycle that turns everyday business activity into powerful business intelligence. Now, that first step, identification, is super important because it's all about being selective. A business does 1,000 things a day, but accountants only care about the events that have a clear financial character. So appointing a new CEO, huge event for the company for sure, but it's not recorded in the books. Selling a single product for $10? Oh yeah, that absolutely is. And while every step matters, let's just jump to the final one, communication. Because honestly, this is the whole point of the exercise. All that identifying, measuring, and recording, it's totally useless if the information isn't shared. The end products are these reports, financial statements, that tell the story of the business so people can make smart, informed decisions. Okay, so who exactly are these people? Who are the speakers and the listeners in this whole language of business? We can basically break them down into two main groups. On one side, you have internal users. These are the people inside the company, the ones running the show. They need that real-time info to plan, to manage, and to make all those daily operational decisions. And on the other side, you've got the external users, the people on the outside, looking in, trying to decide if they should invest or lend the company money or maybe even work there. So your internal users are, well, everyone from the CEO who needs that big picture view all the way down to a plant manager who needs to know if their production line is running efficiently and staying on budget. They are all using this information to steer the ship every single day. The external audience, though, is incredibly diverse. You've got investors trying to figure out future profits, you've got banks deciding if the company can actually pay back a loan, tax authorities are making sure the right amount is paid, even customers might want to know if the company will be around long enough to honor a warranty. Now, for this language to work, for this communication to be effective, the story it tells has to be a good one, right? It needs to be clear, trustworthy, and actually useful. So, what are the qualities of a good financial story? This diagram really illustrates the whole point. Everything flows towards one single goal, and that is making information that is useful for making decisions. And for it to be truly useful, it really boils down to two main things. It has to be relevant to the decision you're making, and it has to be reliable enough for you to trust it. So let's lock in on the four foundational qualities that make accounting information truly valuable. They are reliability, relevance, understandability, and comparability. If you get these four things right, you have a story that people can actually trust and act on. Reliability, well, it all comes down to trust. It means the numbers are a faithful representation of what actually happened. They're not just made up. They are free from bias, and this is crucial. They are verifiable. That just means another independent accountant could look at the exact same data and come to the exact same conclusion. Then there's relevance, which is all about impact. Information is only relevant if it can actually make a difference in a decision. And a huge part of that is timeliness. I mean, last year's sales figures might be totally reliable, but they're not very relevant if you're trying to decide how much inventory to order for next week. See what I mean?
All right, we're in the home stretch. We've covered the grammar and the qualities of the language. Now let's learn just a few of the most important vocabulary words you need to know to start reading a company's story for yourself.
First up, assets. This one's simple. Assets are all the valuable stuff a business owns. This is the physical stuff you can touch, like delivery trucks and machinery, but it also includes things like cash in the bank. These are the resources the company uses to get things done. Now, the flip side of assets is liabilities. This is everything the business owes to other people. It represents the claims that outsiders, like banks or suppliers, have on the company's assets. So if you took out a loan to buy that delivery truck, the truck is your asset, but the loan is your liability. And finally, the word everybody wants to hear, profit. You can think of it as the ultimate scorecard for a business. The math is simple. You take all your revenues, that's everything you earned, and you subtract all your expenses, that's everything you spent. If that number's positive, hey, you've made a profit. If it's negative, that's a loss. So there you have it, assets, liabilities, and profit. If you can get a firm grasp on what a business owns, what it owes, and whether or not it's making any money, you have the fundamental building blocks. But the real insight, that comes from seeing how they all interact with each other. A company with a ton of assets is great, but not if they were all bought with a mountain of debt. That's how you start to read between the lines of a company's story. Every single business out there is telling a story with its numbers. So the question is, what story would you want yours to tell?